Okay, looks like we're live. Good morning, everyone. It is Monday, August 3rd, 2026. New day, fresh start. Can you believe we're in August already? All right, welcome to the morning game plan. Every morning we come in with the same goal. Build a structure before the open, identify the important levels, and understand what the market is trying to do before real money gets involved. We trade live, we break down the market in real time, and we focus on the decisions that lead to consistency. No guessing, no chasing, no forcing trades. All right, all of our trades follow a logic plan so we can repeat what works. All right, team, as I do every Monday morning, I'm going to dig in and start off with the higher time frame chart, and that's going to be on the left hand. The left-hand chart here is a weekly chart of the ES. And our focus immediately comes into this balance here. And I've drawn out this descending channel here just to give us some structure. It's a little bit more evident on the 4-hour chart, but we'll just leave it up there for now just so that you kind of get an idea of what we're looking at. But really what I want to look at on the weekly time frame is simply just the prior couple of weeks of candle structure to see if there's any idea or any clues as to a directional bias, especially when we're in these balance areas. I mean, breakouts can come at any moment, right? And so we have to just assume that we can try to get some type of an edge from the higher time frame. And coming into today, we can see, obviously, everyone's aware that we're gapping up somewhere around where we're up about 45 points from the Friday reversal, the whipsaw that saw the market close near the high. And we can see here that on the last week chart, that Friday rip left the market with it's kind of deceptive because we saw a pullback during the runoff. And I think that pullback was somewhere around 30, 40 points. But I just think that was late to the party longs. But more importantly, we have a bullish hammer here with a strong buying tail. And what I want to do moving forward for the rest of the week is I want to be very aware of where that tail starts, right? So last week opened at 74.90, and anything below there that shows acceptance would signify to me that, hey, maybe this tail is going to be eaten or kind of traded into. Typically what you're going to see in candle structure, what I'm used to seeing is these tails will hold. So I just want to be aware of where that is. Again, you can see also here, just looking at from the moving average perspective, we came down, we barely missed a touch of the 20-period moving average, which has often acted as support. You can see that here outlined, and the market pulled off higher. So again, I think that the bullish structure is something that we need to be mindful of. However, we are still in balance, okay? Bullish structure now would be a confirmation of a breakout where we break out above this balance area and continue to move higher. All right, let's take a look at the daily chart. Again, just trying to get an idea for what we might be facing today. You can see here, so up until now, I mean, we really reached this area on June 1st, right? So for the larger part of the last 2 months, all of June and all of July, we've just been in this larger balance area. And it is a balance until it's not, right? So we have to assume that, hey, the market is just going to remain in this balance area until it breaks out, and assume that there will be a breakout unless we actually see one. All right. So again, another thing that I'm keying in on is this high on July 22nd, which was the high of 75.63, was the high pivot for the remainder of this downtrend, right? So we want to see that's going to be where the structure really starts to shift. And you can see that we are testing at that area right now. We've made a high into the overnight session about 75.67. So yeah, we are, and furthermore, we're forming a bull flag right at that level. The expectation would be, if we had to put a bet on it, that it would break higher. and then above there, we would have this descending trend line that would kind of signify to us where is there a potential for there to be a lower high relative to the most previous high, not assuming not the 75.63 high. However, the high before that was a high of 76.32. That would be another area where, hey, if we're long into this market this morning and we catch a good trade and we are into that level, we want to make sure that we're tightening up, taking profits off, because that is an area where we could start to get into some trouble. All right. All right, let's build out, as we do every day, we're going to build out the most bullish argument. We're going to map out the most bearish scenario. And to do that, we're going to jump into the 15-minute chart. All right, I'm going to use the left-hand chart for our bullish scenarios. I'm going to use the right-hand chart for our bearish scenarios, and let's map those out. Again, pretty simple structure here coming in. We have this gap that is held. You can see we have the overnight, yesterday's high. You know what? Let me clear these out so that the structure is a little bit. Actually, no, we're going to need those. So the open here that I have is the Globex open at 75.50. So really our bullish structure would look like, hey, if price opens up right in this range, respecting our higher lows that we've been putting in relative to the opening gap. We had this test here lower, look below the opening range low. And then since then, it's just been nothing but a bull flag formation. We have a higher low, a higher low. So a bullish open would give us a, just an opening drive higher, and immediately our point of reference becomes the overnight high, right? 75.67, 75. If price can sustain above there, we get some bullish closes, right? Or at least chop around and maintain these levels. We're going to be looking for a long trade with our exit going, taking our scales along the way, but pretty straightforward here on the bullish structure. Again, so let's map out the bullish trap trade, right? Because that's always an important one to map out, especially when we're here towards the balance area high that we just outlined from our higher time frame. Higher time frame analysis is really where the rubber meets the road. I mean, that's really where we can get our confidence in directional movements. So if we break out here and we come back into the overnight range or to the Sunday night range, and we start to lose some of these pivot points into, say, this most recent low. Let's see, what is this recent low here? I think it was 50. Yeah, so 53. Okay, so if we start testing now, you can see that's kind of what we're seeing now. We're testing 56, but if that's what transpires and we start moving lower, I mean, this might be a good opportunity to, if we're playing the balance, right? If the idea is to fade highs and buy lows, right? Because we're assuming that we're going to be in balance, and this is a micro balance nested within a larger macro balance, a 4-hour balance. Well, then it makes sense kind of if we come back into the overnight range that we can kind of scalp this, right? If we can get a lower high and we can get our entry in close to the most previous local high, then we can start looking for short scalp entries that get us that back down to the middle of the range and taking our exits, just taking what the market offers us and exiting quickly, not expecting a break or a gap fill. I mean, if you have a runner on, then great. And if you're managing it, fantastic. But always the expectation is that the market will continue to do what it has been doing. All right, let's map out the most bearish scenario. For the most bearish scenario, we're going to move over to our to the right-hand chart, and that season opened at 75.53 with the market breaking. And you know what? We know what the signs are, right? When ES breaks, it's going to be a lot like Friday, right? Where perhaps we stab up, but open range, let's say we open in the most bearish scenario, and we just get an immediate strong rip downward, right? And we'll know it because we will not respect the gap low. 75.43 is the overnight low currently. If we can get through that and we get through yesterday's high, Friday's high, 75.41, again, at that point, we're looking for short entries. We're looking for entry to test yet Friday's value area high, 75.31, and potentially maybe even down to the settlement for a true gap fill. However, 75.41 will be key, so we'll need to monitor that. That could, if price gets there and it starts stalling out, right? Like it comes in hot and heavy, but all of a sudden it's going down 75, 41, 75.35, but then it just seems to stall and we lose that momentum. That's going to be the first sign that, hey, this move might be open, might be over. And at that point, we'll start looking for buying wicks and we'll know that, hey, let's exit this trade. Let's get out of it. Again, let's talk about now the bearish trap trade. The bearish trap trade, same deal, right? So we have this coming up. Except we test into prior day's range. Yesterday's high is 75.41. Value area high is 75.31. Those two areas give us a prime location for buyers to step in. Okay, so if we start seeing wicks into that area, if buyers step in and we start printing wicks into that area, that's gonna get our attention, right? If we start to see candle bodies start forming in this manner, right? Then we're going to start looking for a reclaim of the overnight low 75.43, and that would give us a trade to the upside and perhaps maybe even into a breakout. All right, so there's the opening bell. Let's get a quick screenshot, and then we'll see how we'll attack this day. Bit of a screen glare here. All right. Make sure we have this correct. Yeah, you can see here we've already come down as low as 75.42. We just did the look below and failed, team. We just got that look. Oh, let me get these documents out. I was working on other stuff. We just got that same look, right, where price came down. It tested below the overnight low. That overnight low was 75.43.50, and we traded at 70. We traded down to 75.42.75. And we immediately saw a reversal. Only 5 contracts traded at the low. So hey, let's be mindful of what's happening here. Let's gauge this for a bounce. $75.42.75. Any longs that's your risk marker, right? $75.42.75 would be your risk marker. All right. Let's see what this is. We have to be cautious here too of this trappy type of choppy price action. Again, it kind of makes sense that price come back down and test those areas, right? Oh, wait a minute. So I got the long at 49.50. For me, this is a valid setup off the market blueprint. So certainly willing to test it out and see how much higher I can get out of it. Again, as part of my trade plan this morning, this was an important level for us. And so I'm willing to give it a shot. I was not able to get the ideal entry. I mean, it traded down there for what? Let's see, 29. I mean, it was down there for less than a minute. Again, happy to take a scalp on this one. I got plus 5 points on the first. So no need to overstay my welcome, especially when I'm not expecting, expectations are key, right? So let's manage those. But at the same time, let's understand, hey, I don't think this thing is going to go and break out right to the high, right? So with that being said, let it do it right now. Because that's just usually the way it works out, right? Oh, God. Let me make sure. Okay, that's my target. 10 points on that one. This thing is it's so squirrely. Like, you just can't. I just said about managing expectations, and the first thing that happens is it just blows my thesis right out of the water. I'm happy that it did it though, because I'm willing to take this this 10 point, this 5 plus 5 and plus 10 point trade. Got it. Plus 10 points on the second. So I'm out of that trade completely. Plus 5 on the first, plus 5 plus 10 on the second. So happy that that worked out nicely. Always nice to start the day with a nice scalp long winner. Again, not expecting too much out of the day, right? I'm just going to try to stay within this balance range. You know, I don't want to start initiating up here now unless we get that bullish breakout scenario that I outlined in the pre-market, simply because we are in respecting the higher time frame, right? Look, before we decide where to trade, let's decide what kind of market we're actually in. I think that that's so important. It's something that's often overlooked. Right, we're in a balanced market, guys. We know we can't have a myopic perspective of the day simply because we're keyed in on a 5-minute chart, right? So we don't want to answer a 4-hour decision or a 4-hour analysis on a 15-minute chart. And before I care about today's candles, I want to know what the larger auction is trying to tell me. And that's why it's so key for me to open up with that higher time frame analysis. I need to look at the weekly, the daily, and the weekly is something that I tend to dial in on Mondays, Wednesdays, and then on Friday I want to see. And of course, you know, feel free to look at it. You know, there was a long time where I had that time frame up on my chart on my screen all day long. So the question here is the market trending? Is it balancing? Is it breaking out? Is it back testing? I think those are the 4 key questions we always want to answer. So here, let's just take a look at it. So what do we get? So if we're looking at a long trade here, right? If we're looking at a long trade, I think that below 75.53 is where we would be long, with where we would be wrong. And so to analyze that, let's just use this measurement tool, right? So if we get long up here and this is our risk, we would actually need, you know, we would need a 75.89 target to justify a 2R to 1R risk reward basis. So just kind of mapping that out. I want to get a good idea for what I'm looking at here. Again, go back to your trade plan. You know, this is what the importance of having a trade plan is, right? Go back and check that plan. Hey, if price got here, what should I do? You know, did I have an idea for what I wanted to do if I get into this area? Okay, I might have released that long a little too early, and I'm okay with that because I could have easily ran into trouble right into this balance area high. But this market looks pretty strong here. Yeah, we got the test that we wanted. Our area held thus far. So yeah, let's just continue to monitor it here. Yeah, okay, this is it. I always keep 2 days of my trade plan open on my desk, and sometimes I get confused between the two. So I just want to make sure I'm looking at the right one. Yeah, so I hope you guys caught that one. For the Market Blueprint followers, that was our setup number 2. If not, don't worry about it. You're coming into setup number 6 here. Let it form, let it build, let's watch for acceptance, right? We want to see, you know, what we outlined in the pre-market, right? So what I want to see here is, I don't want to initiate just around here. You know, we just had this strong move off of the look below and fail of the overnight low. And if you guys are following the Market Blueprint, just remember that, I mean, this is when you have these double setup, like this was setup number 2 combined with setup number 10. It just adds to the more it gives me more confidence at least. So now what I want to see is, again, if I was to get long anywhere in this area, that would be 75.53 would be my risk marker, right? So I mean, one way to approach this is, hey, you know what? If I really like this idea and I'm really willing to test it, but I'm only willing to risk X amount of points. Say I'm only willing to risk 3 points on this trade. well, then that makes the decision kind of easy, right? You put your if you know your risk marker is 75 53, then you just put it, you put a long idea, you put a long limit in here and probe it, 75 56. Again, I can't tell you exactly what to do, but this is just one way to skin the cat, right? So if that's your risk marker, you put in your long around there and see if the market comes down, crashes into it. Hopefully you get lucky, you get a fill, and in the perfect world, it just bounces off your level and moves higher. But we're holding highs here very, 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 very well. Immediately down reversal. So I would expect some structure to form here, right? So let's look out for, so let's see if we can get some kind of print here, right? Where we get some succession here. It would make sense that we come in and we print one lower, but generally what we're looking for is for the market to kind of start filling out to the upside, right? We want to see that follow through. So here maybe we get a pullback candle that kind of gets us long, or maybe gives us a better opportunity for a long trade. Let's see. The market rarely gives us what we want. We have to adapt and we have to move according to it. Kind of like the way it bounced, and I got a delta divergence there, so I grabbed one at 65. Grabbing one at 65. Probing order, just probing it. Now, I wouldn't add if it went lower on me, but I will add to a winner. I don't add to losers, just as a that's just a rule for me. I'd rather take it off and buy it lower than add to the position. So I take the stop out and I just re-enter at the lows. You guys have probably seen that happen to me often. But I just don't like to add to losers. If a trade's going against me, it's telling me something. I like to give myself a clean slate and reassess. So I had that little bit of a delta divergence down there as we came down into the 62s and 63s. But now that momentum to the upside seems to be petering out here. So again, I just have a small probing order on at 65. All right, seems like we're maybe let me get this drawing off the chart. Wait, oh crap, wrong chart. Wrong chart. $65 to $53 is a 13-point risk, right? That's never good. I mean, yeah, I'm just going through the math on that. That's not what we want to do. That doesn't look like a good opportunity, especially since this is not an asymmetric opportunity. This is more of a symmetric opportunity. This is just a scalp idea. It's not like we're buying a massive dip lower. All right, I'm out of that for a I think it's a 3-point, no, 65, yeah, 65 to 62. I'm willing to sit that out now. See if we get a little bit more traction above these. Let's take a look at this chart here. Sorry. Yeah, see, I knew I was rubbing into that fib cluster. I didn't heat it. Now, if we start getting back into below that 60, if we lose 61 here and then we lose 55s, Then we're in for the dreaded sideways day, where the market's just going to ping pong. It becomes so hard to really get an idea for what the market is trying to, just because it's listless, right? It's rudderless. It's not going anywhere. It's not leaning one way or the other. It's just basically in balance and remaining in balance. Pretty much what you get there is the idea there is that buyers and sellers are in agreement, and prices just chopping around. So I'm always trying to ask myself that question, is the market trending? Is the market balancing? Is it breaking out? Is it back testing? If I skip that, on a higher time frame, the 15-minute chart will tell me stories that aren't really there, right? It might. I'm back in on that trade, guys. Heads up, 66 quarters. What I got. I gotta get something to drink. I have to get something to drink. Hang on. Let me see if my son will bring me something to drink. Yep, out of break. Nope. I'm managing this really tightly. I don't want it to come back in on me. But really, after this, what I'm going to do is just pull aside and wait for the break of 71. 66 is where I can. The level of 66 is really where I have a valid trade idea. So I was trying to get in at that 65 off of the delta divergence. I'm within the zone that I can call it a valid trade, at least per my plan. And so I was trying to get in there on the first one. I stopped out right at the most inopportune time. I think I was dialed in on this 13-point risk marker, and I really wanted to get in lower down here, closer to 53, closer to my exit point, but it just never materialized. That same delta divergence condition that I identified that got me into the trade just represented itself again. So I'm okay with with a 3-point loss on a one contract. That's, for me, that's just that's just the operation cost. It's cost of doing business. You see, we just spiked up to that high and pulled back off a bit. But what the market is not doing, right? The market is not losing. I mean, we just put another higher low, right? So we're putting in higher low. The market seems to be respecting the gap. And so we need to maintain a bullish structure here. When you zoom out and you have an idea for what the higher time frame is doing, it really gives you a clearer perspective. And I think that's the one thing that we need to focus in on today. Let me get the right chart up here. What is this chart? Is it this one? No. Is it this one? Yes. Okay, so my stop comes in at below that 61. So right now I have a 5-point risk on it. And then I have a 10-point target. Oh no, not buy. I need that sell. So I'm doing a market if touched if we get up there. 76 quarter would be the first. Typically, I'm taking a 5-point first, but I want to see if we can get up into that second target with some strength and momentum. Again, the ultimate target for me on this one would be up there by that 89.50. Right, that would be the ultimate target. Not sure how many points that would be, but that satisfies the risk reward metric. there. So getting some follow through here very nicely. Getting some good follow through. See if we can get the target. Oh, look at that. Went up, came up to 75s and pulled back strongly. All right, let me go check my plan. Am I running into a problem here? Let's see. Yeah, I sure am. No, not really. Not yet. Okay. So I don't think that I have to really, I mean, we just tested up higher up into 75, but I don't really see the need to tighten up here. Again, just trying to stretch this next trade, respecting the trend, thinking that it could extend higher and get me a little bit more than my 5-point first typical target. Again, if it does come back in on me, I'm willing to take it off for a 3, 4, 5-point gain, and just I'm willing to swing for this one because I already had the first trade that worked out pretty well. Again, just managing a trade respective to the larger to my larger account balance. Again, and because this, so if you look at the higher time frame, team, if we zone out and we focus on the higher time frame completely, right? Let's just get that higher time frame up, because I think that this is really important. We should probably have this up today, just as we're going to continue to reference it. But yeah, if we're that's the blueprint. Yep. Let's see. This is not the right. Oh no. Oh dang it. I don't want to do that. Still trading higher. Let me just move over to this chart. Oh God, let me get rid of this tool. All right. Again, if we focus in on the higher time frame, right? How do I get rid of this? Let me get back to the trade. All right, got the target, 10 plus 10 points, team. Got the 10-point target. Got the 10-point target. We're pretty happy about that one. Let's go. Standard, good, great start to the week. I'm going to also review a trade that I shared with in Blueprint this morning. I think it matters, but really what I want to dial in on today, and really what I want to drive home is the importance of the higher time frame. All right, so I'm going to go ahead and tighten this one up. I don't want to make 10 on the first and then lose the second. And I think that this 89.50 target, right? While I think it is certainly possible for today, I also want to respect my trade plan, and that the fact that may run into some trouble before there, but we seem to be moving pretty good here with some pretty good momentum. So yeah, just going to sit here and monitor that trade. I want to try to get most I can out of it, so this way I can park it for the rest of the day and kind of get over some of these concepts that I wanted to discuss today. Time out, team. I'm gonna go grab a quick drink. Feeling a little bit parched this morning. Hang tight. It's oddly dark in here. Today was really light. All right, team, I'm back. So look, we're coming into this 81. Okay, I'm going to start tightening up my trade just simply because I have to respect the plan. And so what I mean by that is that, yeah, I want to stick with the trade that's working. I want to try to get the most out of it. However, I don't want to sit through a gnarly pullback. You know, I mean, ES can pull back 10 points and with only 12 points in the trade, I think it's just better to take the scalp here, especially if I have a reason to exit, right? If I have a reason to exit, I'm going to take it. It's a pretty big 5-minute print. It would be impressive to see the next one form the same way. However, that is never the expectation. The expectation is always to have a conservative expectation, I guess. I heard Rich in here on Friday going through some of his statistical stuff. That's sometimes I love the fact that we have so many different approaches in here because I'm a chart guy. I'm a technician. I trade off of charts. I trade off of liquidity. I trade off of just those types of analyses. But when you have somebody like Rich that comes around and shares just kind of a different look and a different way to approach the market, it's always refreshing. I always recommend stay curious as a trader, right? Always look for different things. That's how I got my trading system, was over the years just listening to other traders and how they traded and what their approach was. And I just kept taking bits and pieces and then working on my own stuff. And so, throughout time, then I was able to, hone in on my style, and I was able to develop an analysis. Sometimes when I think to the early analysis, is that I used to do before the market, and I cringe because they were just very rudimentary, very, very, very linear. But it was that process of creating that trade plan, of sitting down, staying committed to the process, that gave me ultimately the ability to improve that plan over time. And with time, it just started getting better. And sticking to it at the beginning was a challenge. That was definitely something that didn't come easy. But I'm glad I did it because it got better with time, although the beginning was a bit rocky. And back then there just wasn't as many like nowadays. You can easily buy a trade plan and follow someone else's, and that would be fine, and you can learn from them while you're honing your own style. All right, back into the chart here. Let me know how you guys are trading it this morning. I'd love to know how you guys are approaching this day. Always fascinated by how other people are trading it. It's really, really nice to hear the other guys come in here and kind of share their thoughts, share their perspectives. And one thing I would also recommend is, in terms of staying curious, is I always listen to the other guys that come into the pit and share their analysis as best as I can, right? So obviously if I'm streaming, and then it's harder for me to listen in with all my attention. But of course, I'm definitely listening in because you never know what you're missing. I think that's why we have the pit and we've created it the way we have, is because we want to have a large array of traders helping traders. Because not the more eyes you have on it, the more the differing approaches is going to be better for everyone that's involved. And part of that is using those other analyses to strengthen your own. All right, seeing some loss of momentum here. Let's see, it's just ever slight. The high is not in yet, though. I would venture to say that this is going to go higher. Look, we might get this 89 target right here. Let's go for 88.75 on it. See if we can get it. I think 88.75 would be like what, a 21-point gain. Ooh, look at that. It's getting squirrely right now. It's getting squirrely. Market's getting squirrely here. All right, guys, I'm out. Plus 17 points on that trade. Exiting at 17-point gain. Happy to take it. I'm not going to stick around. Thank you, Easy Money. Yeah, I'm not going to stick around. You saw price action get a little squirrely, right? This thing I could give up 5-10 points on it. I just rather take the scalp. Reload, come back in later, and approach it, attack, re-attack it. But happy to get that trade off. Again, everybody saw how we outlined that narrative at the beginning of the morning. We had the bearish trap trade trigger in the most discreet way, right? So we outlined how the bearish trap trade might, different scenarios where it might materialize, okay? And then when you see something like this, right, a gap, and price comes down into it, do not get bearish down here, guys. Let it prove it, right? Let it prove it before you start looking for lower prices. And look, we got it. It came right in here. It traded down there for about a minute and a half. Now, that is probably the most bullish scenario that you could get, other than a bullish open drive higher, right? We were down at that overnight low for a minute and a half, when I looked at it. Okay, that was just simply an overnight inventory, overnight inventory reset, right? They were just getting all of these, shaking out some of these longs, but the market was undeniably bullish. It came down, it tested the low, it came right back out. We traded it twice. We got the stop off of here. Let me just clear this up. Okay, so this was just an overnight inventory break, right? We came down, it tested this low. And when you see that type of bullish price action, that gives you conviction. I bought it right just below the open, and I took the first trade for 5 and then 10 on the second. And then we triggered the breakout over. Once the overnight high failed here, we tested above it. Okay, this is just a simple little trade review to review these two trades just from this morning. We broke out above the overnight high, and all we did was we just bought the pullback coming into the prior distribution. Okay, so this was our prior micro distribution. Again, micro distribution nested within the larger bull flag. Let me just clear this out again. So this was our micro distribution that we needed to get above on any long trade, and we did that. So it was a breakout of this larger distribution. So what did we do? We waited for price to prove it. Price did prove it. It closed at the high. We bought the pullback and took it for 10 and 17 points. And now comes, the easiest part, or, often it's the hardest part of the day. It's like, hey, it's 10:03 and I'm done for the day, right? Which is excellent, but it's often where traders get into trouble. Clear out. So, and we outlined the risk reward, which was very poor, right? 65 long, risking 13 points to get, up to 89, but surely the market proved it and gave it to us. So solid analysis, solid approach, very disciplined, patient. Again, so this is all framed out from the higher time frame. We knew that coming into today that there was a bullish bias, right? Even though we're testing up above, up into a higher time frame. Let's see, where is that? Where is that chart? Is that this one? No. Oh, you know what? I can find it here. Hang on. No, I didn't take a picture of it. I really need to get this tool out. Okay, let me just close that down for a minute. I'm going to relaunch it. That price, that details bubble is really annoying. Let's take a look at the, yeah, I don't like that at all. And I can't figure out how I got it on there. Any thinker swim? Oh no, don't do that. Any thinker swim experts out there, let me know if you are aware how I can get that off of my chart. My mouse is tracking, giving me the detail of every bar. So heads up, this is an excellent tool for when you're back testing. Definitely a great tool for when you're back testing. Let's take a look at the high here. Look, this market is just, now it's coming up into the high. Again, we're at an area of inflection, right? So we definitely have, we've run into some resistance. Let's take a look at this. Let's see, clusters going up. Yeah, look, we have a fib cluster of resistance here, but now we've also formed a newly formed fib cluster of support at 75.80. That one is dynamic. Above this cluster, let's see, we have 76.36, right? And we don't know if there will be another one that will form within the time it takes to approach this one, but this one seems pretty solid, 75.91. All right, so let's respect that. But when the market is bullish, as bullish as this is, as bullish as open as it is, it's really hard to fight this. Don't try. Just wait for a pullback. There will be one. There always is. You want to be ready for it. So let's discuss that. Let's try to get an idea for where we would want to. Let me just try to relaunch this and see if I can get rid of that tool. I don't think it's gonna work, but. So let's try to get an idea for where we would want to take this long, right? And for that, I'm just going to simply jump out to the higher time frame, right? I think that's the important part for today. I'd have to get some more data on this chart. Hang on. Typically don't want to load a ton of data. Kind of bogs me down, but let's get 120 days of data. All right. Look at that breakout, guys. Look at that breakout on the 2-hour chart. I mean, that's pretty sick. Make sure you're not fighting that. Don't fight that. Wait for a pullback. We'll have one, I'm sure. Look, the other thing that we have to be mindful of is, all right, so we broke out. So this is about the first half and 30 minutes of trade on what essentially there'd be 5 more hours in which to trade today, right? We don't want to start feeling like we missed anything, because the market will oscillate. Eventually, the market will give us another opportunity if we are patient, right? So what will we be looking for? Well, obviously, we're going to be looking for a pullback to the overnight high, to the breakout point, right? If we can get a pullback down here at 75 or so, then that might be something that gets our attention. We want to try to get in some longs right here. And then let's just talk it out, right? So we have the breakout, we broke out. If we get a good solid pullback, there might be, if this is going to be a trend day, then there will be a good pullback. But maybe we get a formation like this and we tackle that 7,600 area, right? We have a naked volume point of control up there from July 16th. That has to be, that will ultimately trade. And today might be that day. That naked volume point of control is 7602.50. So here's where patience comes into use. We want to wait for a pullback. We want to be analyzing. We want to be reviewing what scenarios would get us in. What are we looking for in terms of price action that would get us long? Is there anything on the higher time frame that can help us make that decision? Did you guys catch this? Anybody catch the long trade with me this morning? We had two nice ones. Nice, Bruce. That's a good dub. 20 points on that one. 68. Nice to 88. Oh, beautiful. It was a fairly easy, simple trade too, in terms of pullbacks and testing our conviction, right? That one was fairly straightforward. So I'm glad you caught that one. Good for you. Obviously, I hope everyone catches it. Look, this thing is on me again. I'm gonna have to Google how I get rid of this. Look at this. So strong, so bullish here. So bullish. Careful here, though. All right, this is that area where, this thing is relentless. The only thing you have to be careful, don't start fading this move because you missed a long. That if I can drive home any point, it would be that. If you need to leave, step away from the office, step away, because there'll probably be a pullback, and I was going to speak about that earlier. There'll probably be a pullback within the next 30, 45 minutes. It's not going to materialize now. This move has to end. This impulse higher has to end, has to subside, right? There have to be a round of kind of profit taking, of easing, of digesting. And with that will become, in my opinion, that's where chasers start getting frustrated that they missed a move and they caused those pullbacks. So what we want to do is be very, very patient here. Give it some time. Step out of your office, go get a coffee, come back to it, and then reassess when there is a pullback and see if it's something that you want to participate in. The larger operators of this operated down here, and they operated here, right? Those were the two inflection points. Larger operators in the ES are not operating in here. All right, let me see if I can get this off my chart because I really want to go through the higher time frame stuff. Okay. I was able to get that figured out. Let me give me a quick moment here. Be right back. This thing is relentless, relentless higher, relentlessly pressing higher. 7,600s on deck. We think we got to do. Do we have a trend day in the making here? Look at the ticks. Wow, the ticks have not even broached the zero. I mean, they've tapped down on the zero line twice, and it's just been nothing but positive ticks. Nothing but positive. I think our low tick of the day is like -15. This thing is uber bullish right now. Don't fight it. We'll get a pullback. That's the one thing about trend days too, is that there's always one good pullback. There's always one good, and it typically comes in the afternoon. So there's something that I shared earlier that I want to retouch on. It just came to me. So I said that I mentioned earlier that where's that chart? I mentioned earlier that I like to listen to other traders, but and that's, while that is true, there was a time when I was listening to so many traders that I had to turn it all off in order to get in alignment with who I was. And there was a period where I was kind of lost, and it was a time where I had to shut out all the noise. And the reason why I'm bringing that up is because sometimes, while you can be listening to other traders and different approaches, remember, be on alert, be very vigilant to if you're listening to too many analyses and it's hurting you. Okay, because there is that, we do have to be cautious of that. Again, so coming into this morning, we said we wanted to focus in on the higher time frame. We wanted to respect the bullish breakout. If we highlighted earlier that where we could run into trouble potentially is at this higher time frame trend line. But this is why the higher time frame matters so much, because without this understanding or this perspective, right, perhaps maybe on this dip lower here this morning, we're looking for a gap fill. But looking at respecting the higher time frame, we know, hey, we just had a breakout over these local highs. Thanks, buddy. That's okay. Appreciate you. I mean, look, we just made a higher high. We just took out two local highs and moved higher. So that is telling us that, hey, we were just testing this high here at 75.63, and we were trading 75.67, and I know we are consolidating. We're bull flagging at the high. We're forming this bull flag structure here at the high that ultimately broke out. Okay, so we want to always use that higher time frame to frame our narrative. It's where the larger operators in these instruments are really focusing and making their decisions. They're not. I can almost guarantee that they're not going to be using a 5-minute chart. That is a daytime frame trader chart, and so you can see here off the higher time frame. This is a 4-hour chart. Look at this reversal, right? Look at that reversal there. That was a big tell for me over the weekend when I saw that. I mean, I wasn't at my desk on Friday. I left really early in the day. I had a doctor's appointment, so I was gone for much of the day. Fortunately, I grabbed a couple of points in the pre-market, but yeah. But look, that when I saw that reversal, it was like, all right. And everyone, most of the market blueprint readers know that I was looking for this down move. Right. And then when the market came and did this on Friday, I just had to change I had to dig through the analysis, and I saw certain things that redirected me and rechanged the narrative. Like, okay, listen, this is not what we're seeing. Every time we dip down, I saw it here. Saw it when we dipped to the 73.50s. I saw it when we were oscillating down here. This day, in the Manny Trends room, we were getting long on this Thursday before the Friday break, simply because the analysis was pointed to, hey, that there were too many people short, and we got long right off the lows. I remember a couple of us caught that trade. I know I was in it long, and we got out near the top. And then on Friday, the landscape had shifted, and we sold it into our resistance point up here. Well, we had a setup there. Anyhow, that doesn't really help us today. What I want to get back to is the higher time frame, right? So coming into this morning, there was really no reason to get bearish down here. You know, the market we're respecting how we got here. Look at this reversal, right? Even though this candle print, we closed 40 points off the high. If we closed 40 points off the high and that pullback was true, then we would have opened on Sunday night. Say we gapped up higher, fine, right? But we would have then been printing. If this, let me just widen this out a little bit so y'all can see it a little bit better. Again, focusing on the higher time frame, focusing on the analysis that kind of framed the thinking coming into this morning. So if this sell-off were true, right, then it'd be what we would be thinking is, hey, you know what? When we should have, then even if we gapped up higher, even if we had this gap higher and we opened here, right? Then if that sell-off were true, right, then these sellers at the close would have been justified, and we would have printed this bar here. Okay, and then the next bar would have been somewhere in here, and then in here we would have had successive prints where it was just where those sellers were justified. But no, we saw the opposite, right? Instead, we saw the opposite. Price tells us everything we need to know. Instead, those sellers right at the open, they've been justified. Not only once at the open, it happened twice. Let's just dig into the 30-minute time frame. The 4-hour chart tells me what kind of market I'm trading, and I go there often. The 15-minute chart tells me where to execute. But the 15-minute chart, guys, is not where I build my opinion. It's just not. Let me highlight this, and then let me go to a 30-minute. Frame out this lesson a little bit. Okay. So last night, here's the gap. Here's last night's gap. That low came in at 74. The opening range low came in at 74.50, 75.45. I remember I was watching it because I saw this trade down to 75.44, and I got long right into this. And I got it for 5 and 10 points, right? So then coming into the morning, so that was the first test of the gap that held. And then we put in a higher low. And then look what happened. Against that low, against that gap low, that opening range gap low, we tested it again. And then once again, that's 3 setups. That's the second time that setup executed and worked. Okay. And then we ripped higher. This is why this is the importance and the weight that the higher time frame gives us. A market can rally 80 points, and that could look like something really spectacular on a 15-minute time frame. And on a higher time frame, it could just be right in balance. It could mean nothing on a higher time frame. That's why you see a lot of social media traders arguing and getting caught up in just, in things that they shouldn't get caught up on. Oftentimes these guys are arguing and have so much conviction, and they're on a 5-minute chart. They're looking at different time, and oftentimes, really you'll get arguments, but there'll just be 2 traders operating on 2 different time frames. You'll have a 30-minute guy arguing with a 5-minute guy, or a 15-minute guy arguing with a 4-hour guy, and they're not on the same page. Both traders can actually be right and be looking at different directions, but relative to their time frame, they could be right. So up until now, we were, during this larger balance, we were in balance. We were expecting 2-way trade. We were expecting balance to not break out. But after this breakout above these local highs that were respected, remember we put in this high, then we had lower high, lower high, lower high. That was negated on Friday. The narrative changed. All right, so we just traded up to 7,600, and now we're kind of stalling out. So let's see if this is that first time where the market, kind of takes a breather and kind of step backs and takes and digests this opening drive, this move, this bearish trap that turned into an open drive higher. Thus far, we have a range of 57.25 points. And again, another thing that we have to look at is developing value, right? That's all very, very important as well. So look at where value is compared to Friday. Friday value area high, 75.27. Price has not even gone down there to test it. The market is in agreement. It's seeking higher value. For whatever the reason may be, I'm sure you can find tons of opinions out there on it. The market is perceived that the S&P is worth more today than it was on Friday. And Friday was at a discount, and the buyers showed up. They took it higher. It doesn't have to get any more complicated than that. One of the biggest areas that I wanted to see myself improve on in 2026 was identifying that switch, right? The biggest mistake isn't a bad entry. It's using trend tactics in a balancing market or balancing tactics in a trending market. So often, that was an area that in my own personal trade, it needed attention. And what it was more, I would be able to identify balance, but it would always take me a day or two. And that day or two, when we're trading, right, that day could be a drawdown day that we don't necessarily need. I wanted to be able to identify the potentiality of trend going to balance and balance going to trend on the day that it happens, and not need that day to prove it. And so there are ways and there are lines in the sands that we can use to tell us, hey, if price gets here, everything changes. If price does A, we're in balance. If price does B, that balance is broken. And paying attention to those signals and not overcomplicating it was a big area for me. Yeah, it looks like we're gonna balance here for a bit. We traded, okay, so look, we traded up to 7,600. There was a delta divergence, and only 10 contracts came in at 7,600 on the long side. Okay, so those guys chased the market up higher. Who knows if they'll be justified? The market is very strong today. But then at 75, 99, 75, we only had 147 contracts trade. 75, 99, 50, we went to 443 contracts. That's a good taper. We have a 2-point taper. We'll see what the market wants to do here. I mean, I think those guys can get bailed out. Those 7,600, those 10 guys long at 7,600, they could get bailed out. Who knows? The market seems to be trending higher. And one of the most important things that I learned this year, and I think that I'm interested in knowing what there are two shifts that I've made this year in terms of my yearly performance. Was one, I sized down completely in July. So last July, I had a really horrible July. It was bad. I didn't make money in July because of a few bad days. Okay. And what that taught me was I went back in August, I came back and not only got the loss back from July, but also came up like 35% gain on top of the loss from July. And I thought to myself, gosh, if I would have just dialed it back in July and just been a little bit more patient, what would that have meant to the yearly performance? And so at the end of the year, I was analyzing that. And I wrote it down several times. I said, hey, if this July, dial it back 1 to 3 contracts max position. And that's what I've done. And I'm excited to see how that's transpired, because this July has been black and white compared to last July. And I don't know if that's the price action, the analysis, or my execution. But one thing I know has helped tremendously has been the fact of scaling back to 1 to 3 contracts where I'm normally at a 4 to 6 contract trade. It's given me like this peace of mind and this ability to manage the down days, the drawdowns so much better. It's almost, that was a tertiary effect that I did not expect. The market doesn't care what size I'm trading, right? It simply, but my results do, right? When you go to file your tax return at the end of the year, that's really where you realize, hey, where that one bad month really hit you. And when you're trading as we are, and risk is a constant ever presence, we have to be mindful of really controlling that risk, staying within those parameters so that we can have a prosperous year. All right, I'm going to switch out here. I'm going to get this going here for myself. It's a good idea. Going to go ahead and use my PTG, my Polaris Trading Group algorithm. I'm sure you guys have seen David use them. I cannot recommend them enough. Just a different strategy outside of my point and click trades. Again, when you're looking for edge and you're looking for that monthly or yearly performance, it's pivotal to have a system that trades outside of your very own. Understanding the strengths and weaknesses of every trade system is something that is also very, very, very important. Another effect that the higher time frame gives us is it certainly gives us a lot of mistakes disappear. A lot of mistakes go away once you start trading a higher time frame. Just simply because by the nature of how you have to wait for candles to close, you're typically going to be by nature more patient. All right, coming back in to save those guys, those 10 guys long at 7,600. Let's see. Hopefully they didn't cash out down there at 75.95. Hopefully they held their position and respected the strength of the market, although the risk reward on that was putrid to say the least. I mean, let's just look at that. Let's just to get a 2-to-1 on this, right? From say, wait, it's not even there. It was 7,600, and if you risked 5 points, which you would have gotten stopped out. However, let's just take a look at it. You still need 76.10. And I mean, just the probability of success and the trading down to this low volume node is very high, and finding maybe it gets rejected from there. That's probably the better idea. It's kind of quiet in here, man. If everybody got the Monday morning blues, let's see. Check the social comments. I'm not. I'm not on. I was streaming on Substack and posting it to social media on Friday, and there was just. I don't know. There was a batch of rookie traders that was sending in some questions. I had like 7 questions on Thursday and 5 or 6 questions on Wednesday. And it kind of kept the flow going. I appreciated those questions because it just gives me something to do in the meantime. But yeah, so it seems kind of quiet in here. I wonder, let me see who's in here. Okay. Yeah. Okay. Well, let me know if you guys have any questions. I'd love to engage with you and help you out. If you're in a trade, manage a trade. If you've already gotten your piece out for the day and are kind of, I don't know, surfing the internet or watching some video, it's quite all right. That's what it's all about. Get your piece out and stand aside. So what time did that low come in? That low, jeez, very, very strong here. Delphine, which type of day is it? So in terms of cycle days, I'm pretty sure it's a cycle day 3. Just double check that. Hang on. Yes, cycle day 3. Good question. Thank you. Yep. All right, we traded as high as 75.0375. We went 2 by 2 on there, so I expect that to re-auction again, meaning I expect that to come back into that price and retest it. Just seeing that grindy higher action. And there's one characteristic about trend days, and you know, we typically good. That's a good thing to talk about. So how do we know if a trend day is underway? Well, you know, it's hard to say, right? No one really knows early enough. But what I use that has worked well for me over the course of my career, and really when I started to really look at trend days, is so if by 11 a.m. Eastern time we have not had a observable visual pullback, like something, you know, really that's observable. So for instance, today we have not had that. And so if we keep grinding higher and doing this, you know, just stair stepping higher, and it's 11:30, 12, I consider it's going to be a trend day. And then, so here's how I engage that. So say that, because this has happened to me, right? My read was off on the morning. I came in bearish, okay? And I was trying a short here. I got stopped out. I had a hard time flipping, getting long, because my analysis told me it was going to be a bearish day. Happens to all of us, okay? So then what I'll do is, you know, after you try, of course, you're going to try it again. Maybe you try to short it here, and then, you know, and then the writing was on the wall after that, right? After you got stopped out on this candle, then the writing's on the wall. Okay, so now you're standing aside, you're sitting on a couple of losses. Now what do you do with your day? Well, it's very hard to get long on a trend day when it's like this, right? It just, although we all know that at some point we should probably just hold our nose and buy it, it's not ever a great justifiable risk reward. However, this is what I've noticed, along with that 11 a.m. trend identifier, is that typically when you get this grindy higher type price action, what we're going to see is in the afternoon, there's going to be something like this will happen. and we'll get that one good pullback, and the trend will resume. And team, let me tell you something, that has been a lifesaver for me. Once I identified that there, typically on trend days, there's one good pullback, and it's typically in the afternoon. There have been times where I said, just like this, where I came in with a bearish lean, I got short or long against it. I took a position opposite to the trend. And then I've waited to the afternoon, like I've simply left the office and came back later, and have been justified to do so, catching a good trade in the afternoon. And I don't know exactly how many times, but has happened more than once where that afternoon trade has corrected the morning imbalance from my account. And also what stepping away and coming back to the market in the afternoon has done for me is it's also allowed me to mentally adjust. It's given me the mental clarity because on this move up, you're still holding that mental bias. It becomes very hard to just switch, because so let's just walk through this again. So say that you came in with a bias, you shorted it there, you got stopped out here. You shorted it here and you got stopped out here, okay? So then now you bought it, right? So then say you bought it here on this pullback, but every tick against you, every time that market goes against you, you're going to be thinking, your mind is going to go back to that short narrative, and you're going to exit the trade for a 1 or 2 point loss, and you're going to try the short, and then you're going to get stopped out again right over here. Often, that is the mental progression of what happened. That is the mental pattern that often happens, and that hurts so many traders. So what I found that has worked the best for me is to walk away, and it gives me the mental clarity to say, hey, okay, I need to let go of that narrative. I need to my analysis was wrong, accept it. It is not right. It is not going to work today. Come back in the afternoon with a clear mind, and at best, look for that pullback in that trend day. Or if not, I have a very clear read, an unbiased, objective read of the price action that has allowed me to trade better and claw back some of that early morning loss, if not all of it. Okay, that's never the objective. The objective is just to trade and put on a good trade and see where the account is at the end of the day. However, I've been pleasantly surprised. Like, oh wow, I stepped away and I came back at around 130, and this trade materialized. So it's like the morning didn't even happen. Yep, you're welcome, Delphine. Happy to share that. I think that's a big deal. So too often, we've all gotten into the day where we're fading a trend day. We're going against it, and I understand that mindset. I've been there myself before. It's brutal. It hurts. It not only hurts your account, but it hurts your confidence. It hurts your mental capital. It hurts. It hurts all over the board. And in hindsight, we'll think, gosh, why didn't I recognize that? And it's not as easy as it sounds. It requires you to completely erase your analysis that you probably worked on, that you built up. It requires you to release that analysis and completely pivot. Well, okay, you could do that for a trade, but the moment that trade goes against you, your mind is going to go what? It's going to gravitate towards what your bias was. And that's what makes, flipping and getting long on a day like today so hard, if you came in with the wrong bias. Because every time if you enter a long trade, every time it goes against you one tick, or a couple of points, you're not going to have the mental fortitude to hold that trade, because your bias is still in there. It's still wedged in there. It's still your lean for the day. This is another. So again, I can't. Again, days like that. Also, another thing that has worked for me and helped me out is just simply having the PTG strategies, right? Like those days are days that I understand that one of the things that has been hard about trading a system that's designed outside of something that I may have designed is that I had to commit to allowing that system to play out. So I cannot. I am going to hurt the system if every time it gets into a trade I intervene. So I had to commit to letting those trades play out as they were designed. And so that took a little bit of getting to understand what those trades were doing, and understanding how they were, what the strategy was based on, what the rule set were, and then trusting that rule set even if you haven't designed it. And that's something that did not come easy to me. I worked on it, and now I've it's something that I continue to work on. Slow, grinding higher type of trend days are can be boring from a price and trading perspective, but also can be very lucrative if you just respect the trend. So Delphine has a question. In this kind of day, most of the time, you have a pullback in the afternoon. Yeah, so that's what I've noticed, Delphine, about these days is that it can be so frustratingly hard. And I just play and the story that I laid out was how I learned that was that so. If the way I learned that by 11 a.m. I think that it's going to be if we haven't had a real pullback, it's probably going to trend for the rest of the day, and it's going to be that doesn't really give us a signal. That just tells me that hey, the way I learned that trade, that idea was through negation, right? So I learned that because it would be 11 a.m. and I'd still be trying to sell it, and I realized hey, this is not working. And so then the way I learned that there was a good pullback in the afternoon was I would leave in frustration. Like you all know that I use stop loss protocol. So I would leave and I would turn away from the chart for a half an hour, and I'd look at it and I'm like, it's still grinding higher. And I started noticing that if by 11 o'clock this thing didn't pull back, it's just going to move higher. And then I would come back in the afternoon about 1 p.m. and I started noticing that, hey, there's often a good pullback in the afternoon. And I've noticed that over and over again. Is it perfect? Nothing in the market is. However, it has become, I've noticed it and traded it enough that it is a part of my strategy. It is part of how, if I got this, so there's also been days where I just missed a long trade. Say my read wasn't right. I wasn't selling it, but I just could never justify the entry. And I saw it trending and I was just watching it, waiting for a pullback. I didn't catch the pullback, and I'd leave and come back in the afternoon. Oh, there's a pullback, and I'd buy it, and that would be my one trade for the day. And it became almost very simple. Like, okay, the market's trending. I missed the morning. I'm just gonna go do something else and come back. And I'd come back later, and it turned out to be a really easy day. Yep. Thanks. Hope that helps. But it kind of takes that edge off of, hey, I missed this move. When's the pullback going to come? When's the pullback going to happen? Is there going to be a pullback? And it also, more importantly, it prevents us from that anxious mindset getting us to fade every red candle or every selling tail, thinking that it's going to pull back. I could have. I mean, I had 75.49 long. That would have been nice. That would have been a nice hold. Gosh, I wish I still had those, huh? I took 5 and 10 points on that. Like, I'm typically better at holding than that, but again, I wanted to respect the balance. And that's what happened. I'm not going to get upset about that. A bird in the hand is worth more than 2 in the bush. So we could probably run into some, micro. I mean, it's hard to say here, but just from some of my work, we can run into a problem here. Let me just take a look. $76.20 to 25. I know it's far away, it's higher, but that's so if there was a gun to my head and I had to fade this move, or if there's a gun to my head and I was challenged to find the high of the day, I would pin it up there, which would put us up what on the day? Let me just take a look at that. And I would put us up, 105 points on the day. And that would give us a regular trading hours range of what? Let's just take a look at that. Currently, our range has been, for the regular trading hour session, we've had a 63-point range. Another 20 would put us up at 83 points. I'm not sure what the average range is for these last few days, but yeah. $76.0750. 76.0750 might slow things down. So if I was long, I'd probably target that. If I was long on a scalp, probably want to get out ahead of that. It's a one-to-one alternate right here on the chart. You can see it very clearly on these yellow lines, 7607.50. Let's take a look at the fib clusters. I knew we cleared it out. I knew we cleared it. So now you can see that the algorithm is just, it cleared out the higher time frame. We cleared this one. It converted it to support. You can see here, right? This was resistance, red resistance. Now it's blue support. And it's giving us another support at 7,600. So respect that. That could be a potential scalp entry long. It's always hard to justify the risk on these moves. And then to have the mental fortitude to hold it, right? Because again, it's not about not knowing the directional move. It's that, hey, you know that the risk reward is not great here, and the moment it starts to pull back 1 or 2 points, you're going to think, hey, I can't really justify this. I'm not really confident in this trade, and you're going to end up covering it, and you're going to get chopped up. 1 to 2 points losses on the trend. In hindsight, you're going to see how did I lose 6 to 8 points on 3 to 4 trades on a day that was so easy and on a day that was clearly a trend day to the upside. And how did I lose getting long on a trend day to the upside? Well, that's one of the ways that it could happen. And one of the things that we have to protect against as day time frame traders. I'm going to be looking for that pullback into the afternoon. Hopefully we get one. Hopefully we get a nice one. Into that 1:30 to 2 o'clock to 2:30 time frame. That's when I'll be back at my desk after the morning. right. Let me get back to this. Sorry, guys. Just tailed off there. Adrian, Manny, question on read the clock. May I ask for the reason why we have a high and a low possibility at 12:30 p.m.? Okay, Manny. Why we have a high and a low possibility. So yeah, so 11:40 to, well, here, let me just explain this to you, Terry. It's not as linear as I can, yeah. Okay, let's see. So basically what we want to focus on there, Adrian, is for the low to be in the 11 o'clock hour and for the high to be in the 12 o'clock hour. But I kind of try to give you a little bit more perspective on it, and I sent you a private message. Let me know if that makes sense. So S3 days are typically our most choppy day, which is why if you remember earlier in the day, I had taken off the first trade at 5 and 10 points. And that is because I had come into an S3 day expecting the day to be choppy. And so an S3 day in combination with the cycle 3 day, I didn't think that I would have more expected us to remain in balance had it not been for the gap. But I wanted to book the profit early because of that. I'm usually really on my toes on S3 days. I'm taking 5 and 10 points, seeing if I can get, historically, statistically, S3 days are the days that I least get the 15-point target. That's another reason. So yeah, but good question. Great question. Again, and it's a guide, right? I always say this: it's 75 to 80% is what the price action is telling us, and then 25% of that is going to be time. There was a time that I didn't even share the clock because it would just confuse so many people. They would think high and they would think that it's going higher. And I would have to walk people back off of it and say, hey, you have to focus on price action first. Time comes second. But it was after, speaking to other people and then seeing the value in it, that I decided to add. If you remember, the market blueprint initially came separate with the levels, and then I added the clock to it just because I thought, all right, I can explain it. And now that we're back together in sync and all my summer vacations are done, I actually put in a large amount I put in a few hours. I worked for about 6 hours yesterday, and what I am putting together, I think is going to be really beneficial to everyone. And essentially, part of that is going to be the execution clock workshop. However, I really wanted to help people make money, right? And so what I put together was I put together a program that will take any trader. Here, I'll share a screenshot of it. Sorry. Let me get there. Let me see if I can share a screenshot. And I think that this is going to help more people than the clock. But then the clock will also be a part of this, the execution clock. Let me just get another screen share here. Okay. So if you can see here, let me just, if you can maximize that. So what this program is going to be designed to do is it's going to take any trader and it's going to really frame the approach behind to frame it behind a professional approach, right? So it's going to be a complete course, and ultimately what the course is going to be designed is in the 3 different phases. Fortitude building, that's where we're going to build our system and our process, and we're going to solidify that in an environment that's conducive to learning. After that, we're going to go into the evaluation protocol, and that's going to be where we actually purchase a $50,000 account, and we manage that account, and we trade that account up until evaluation. And then the final phase 3 would be how we get the account from the funded stage to an actual payout. And I think that this is going to help traders really where the rubber meets the road is actually making money. So I'm hoping to, I'm putting the final touches on it now. I'm going to edit it today during lunch, and I'm going to combine that then with the document that I've had for the execution clock that I've had for a while. And then I'm going to take those 2 and combine them and do them as a workshop in the Manny room. So I'm hoping for this week, Delphine. Delphine asked, when will the workshop for the execution clock be? I'm hoping for this week. I'm hoping for, so there's one thing that I have on deck is, and just so if my wife travels, she needs to go to New York City for work. If she has to go to work, but she doesn't know yet. So if she does, she'll go on Wednesday and Thursday, and then I'll do it on Friday. But if she doesn't go, then I'd like to do it on Thursday. So this week, Thursday earliest, Friday the latest, and I'm going to announce it tomorrow. I have to talk to the guys also, like Danny and Marlon, and just kind of get that run by them. So question for you all is, so would you, if you're more interested in the execution clock, then I can just do that separately. I thought that this could help traders kind of get to that payout portion and really get an idea for what that might look like and how you manage that account from evaluation to, yeah, okay, good. All right, so we'll do the whole thing. Perfect. Okay, so okay, so hey, listen, I have the PTG trade on here long. Let's see, I think this is account 31. Let's see. Dang it. Thought it was here. Oh no, it's on this one. Sorry. Let me just give us something to look at here. I'll just maximize this one, and we'll manage that and see. Watch it go hit that target. So this is the second trade a day. Again, I just turned it over. All right, got the first target for 5 points on the A4, the PTG A4 long. Looking for a 10-point fill up at 76.11. Again, my parameters are slightly different than David's, but you can customize those. Yeah, there you go, David. There's the master. You can customize those as you see fit. Again, and so guys, there's one thing I want to point out to you. That's where the PTG auto trade algorithm really shines. Is on days like today. You see, I was not willing to point and click. However, I turned it over to the algorithm, and it handled the heavy lifting for me. We had I had the point and click trades earlier this morning from the plan, and then just kind of sitting around here. You guys saw when I turned them on, and I just turned it over to them because it really can capture these moves very nicely. What? Hang on a second. Hang on, team. Give me a second. What? Did you talk to mom? All right. Good job, Jim. All right. So now the PTG ATA has me hit my first target, and it's automatically raised. Control the risk for me by moving my stop loss to break even, and so essentially guaranteeing a successful trade with 5 points on the first contract, and now looking for the second contract target of hang on a second. Oh, okay, hang on. I see what happened. Hang on, just give me a second.
The latest Atlanta Fed GDP.
All right, it looks like now the audio is working. Let's see if I can get the screen share up. Can you guys verify audio is working? Okay. See if I can get the screen share up. Bam! Back in business. All right, let's go. Completely lost what I was talking about. All right. Not sure what was going on there, but all right. So back to this trade here. Let's just see. Let me maximize this one. This is the one that I'm in right now. Again, stop is at break even. Willing to let it work. It came down. It tested 76.02. Stops at break even. So ultimately a net 5 point on the trade. I'm going to let it work. Just going to let it play out. And I think I mentioned earlier that if ever any of you are interested in David's work, and I highly recommend it. Obviously, you can see I use it. One of the things that you can add it as is unless you can use it as your sole strategy. That's fine. There's nothing wrong with that. But you can add it as an additional strategy, okay, and then enhance your returns over the course of the week, month, and year by adding a strategy outside of yourself, outside of the one that you're using now. And one of the challenge, again, like as I mentioned before, one of the challenges that I faced with that was then just letting it work, not closing it before the trade reaches its completion. And that was a challenge for me at the beginning for sure. But I realized then, after you see the trades work enough time where you intervene, you start to understand, hey, I need to let this operate autonomously. What I can control of it is when the conditions are when I think that the conditions warrant me using it. But so back to what we were discussing earlier. Hopefully I can get that project out this Thursday, Friday. I'm going to meet with the guys later on today, and we'll go over some of those particulars. But I'm pretty excited about that because especially the 50K program, and also the 50K program taking, building up a process, having a professional approach to the risk, and building that process up to get you first, to build your process, then to get you funded, to get you past your evaluation, and then ultimately to get you to the payout. And it's what I think the most important thing about that is just how you can have it. The approaches can be almost kind of boring, but boring trading is good. That's how we get paid. And then also most importantly is the clock. I'm excited to go over a lot of the nuances of the clock because it is very nuanced. It is something that it gives, if you see it, if you've often seen me post the recaps on X or something of that nature. Let me just see. If you've seen, I've posted some recaps of it, and of course, like everything else, it's hindsight is always 2020, but in trading. But the idea when I almost, again, like I said, I used to not want to share it. Here you can see, I used to post these recaps where the high came in, where the low, and so this was an S1H day. Let's just go through it. So coming into the morning, we identified that it was an S1H. Oh, no, that's not it. Okay. We identified that it was an S1H day early in the morning. So the expectation was a high between 10 and 10.55. These yellow boxes, this is 10. These are time-based boxes. So this is 10. This is 10.55. I put them in to the minute. So, and then the expectation was an AM high between 10 and 10.55. You can see we got that. Then the low was between 11 and 12.15. You can see we got, this is 11. This is 12.15. You can see we got the low there. And then the afternoon was a high between 2 and 2.55. This was 2 o'clock. This was 2.55. And you can see we put in a high pivot in the afternoon, a low pivot during lunch, and the AM high. So one of the nuances is how to trade it. I want to explain the process and build up to it, but there's a difference between you're seeing a high, right? And there's two different ways you can approach it, right? You could be a seller of the high, or you could be long into the high. And that's what matters most, as opposed to what the pivot is. Okay, so that's really what I want to discuss about how to tactically engage with the clock. Also, I'd like to really go over the nuance. Each day, there are 4 days. There's a 4-day cycle the clock has follows a 4-day cycle. So we have S1 through S4 days. Each day carries a specific characteristic to it. And I think that is really, really, really important in how you approach it. And then I also want to stress that price comes first before anything. But we'll go over that. I think that would be really valuable, and I've been promising it for a while, so I'm excited to put that out. Again, and we'll do that. We'll follow the normal pit in the morning. We'll do the normal pit presentation. So we don't want to take away from that. And then what I'm hoping to do is then have that that workshop commenced somewhere during the midday doldrums, somewhere during, between starting at noon and carrying us maybe into 1 or 1:30. And again, the only thing that would okay, so still this trade is still working out here. The only thing that would negate that is if like we have an extremely volatile day and the S is ranging on news or something of that nature, then we would want to dial in on the market and focus on that, because that's an opportunity and those days don't come often. But I think that where we are on the higher time frame, if we're coming back here, right, we're gonna maybe we do get another strong breakout day higher this week. But I think that this, if we just go back and look at the weekly chart, right? Okay, so we looked at this morning. We're at the balance high. If we're going to get a breakout, bullish moves tend to be a little bit more controlled, a little bit more tepid, where you get that buying, you get that initial impulse move during the morning, and then there's a lull in the day, and then whether or not we get the follow through in the afternoon is really what we want to pay attention to. But that gives us the opportunity during the midday to kind of work on some other things and set the charts aside and focus on other things that might improve our trading. See, just looking at here, we're approaching that descending trend line. It was breached here on the July 15th. Look at this, team. I mean, essentially from June 1st, we've gone nowhere. We've just been in the same balance area. It was wild to see how many bearish bets were being put on during this move lower. When I looked back at it at the end of the day, I said, "Oh my God, there's no way. No wonder it rallied." You start to understand really how this market is really, it's less about, macros matter and so forth, but it's mostly surrounded by liquidity. These banks want to make money and they're chasing that liquidity all day long. So let's say if we would have bought any one, and let's just review this right here. Say if we would have bought any one of these pullbacks, right? We would have bought this pullback here. Then we would have bought a breakout, right? We had the pullback that confirms buyers are still active, right? And then we would be looking for 2 to 1. We'd be looking for, let me just fix the properties on this so it can be a little bit more clear to everyone at home. Let's go with 4. Let's go with 4. So we can see that a little bit more clearly. Just kind of dig into what makes sense here. So if we bought a breakout here at 76.08, again, respecting that we have a trend day. And, again, there's 2 different ways you can approach it. Wait for that afternoon pullback. But if you want to buy a breakout, which is tough, right? But that's the trade. That's the idea today. So you're risking what? You're risking close to 7 or 8 points, and you need 76.2350. It's tough. I don't think I can justify that, being where we are on the higher time frame, knowing that we're going to head into some headwinds here at 76.15 to maybe 76.20. So, I mean, there is room for it, but it's a little bit late. What we can't do is sell it. Let's not try to sell this, guys. So I am offered on the PTG on A4 long. I'm offered at 76.1150. This is where it always gets testy, right? So you have like, I don't know. Let's see. Wait, what is that? 31. So you have, 7 points in it. Do I take it off or do I wait for the last target? Yeah, I've got to let it play out. That's the run. Another thing I like to ask myself is, hey, so in this case, right? Let's just use this example. If this trade came back and it came to within a point of my target, my ultimate target, if it retraced and took me out at break even, how would that make me feel? Would I be okay with that? Or is that going to low, in a very low frequency, affect me emotionally and lead to some damaging behavior? That's a good way to always to look at your trade management. Doesn't have to be very linearly, like a linear black and white, yes, I'm going to hold for target or no. Too often we overlook the human element in that, hey, how would that really make me feel? Let's not ignore the emotions that plague so many of us. And if the answer is ever like, hey, that wouldn't sit well with me, and that can lead to detrimental behavior, then take it off. Take it off, take a walk, enjoy it, but don't come back and later and say, and don't let greed creep in and say, if it works out, don't let greed creep in and have you and lead to you chasing it. Just be okay with your decision, because you were not okay with the way it might have made you felt had the trade traded back down to your entry and stopped you out at break even. That's another way of looking at it. All right, team. So coming into 11:45 here, we're going to start wrapping it up for the day. Hopefully I can get this target. That'd be nice. We got it. I've been got it. Got the target. So plus 10 points on the second one. Nice. Very happy with that. Very, very happy with that. Yep. Super happy about that. Okay. So, hey, team, that's going to wrap it up for this morning session for me. We had three trades. All of them happened to work out, but more important. Well, first, let me ask if you guys have any questions about anything that went on today. I think if you have any questions, that'd be a good time to post them in there before I cut out and go grab a bite to eat. Okay. So, hey, most importantly, the one thing that I want to drive home today is, okay, thank you, Terry. Yep, hang on. Oh, you know what? Just 1 second. What is this? Let me just answer this. Okay. Oh, yep. I think that the most important thing that I could share, the biggest takeaway for me, at least from today, is that today's market gave us a good reminder that not every profitable day has to be exciting. We spend a lot of time talking about the difference between trending markets and balancing markets today, because if you can identify the environment early, half the battle is already won. The tactics that work best in balanced markets usually don't work well in trending markets and vice versa. And so the idea today was to come in here and try to make sure that we can delineate the two and separate the two and pivot with the market with what the information is giving us. I came into the day being a position day trader, taking 5 and 10 points because this was not the expectation. However, as the day unfolded, I was able to get more in alignment with what the market was telling me and capitalize on it in a very, very run-of-the-mill normal day. So today wasn't about catching the exact low or exiting at the exact high. It was more about respecting the structure that the market was giving us. A slow grind tends to feel boring. They don't give us the adrenaline of a 40-point candle, or the adrenaline that we got on Friday and Thursday. But if you stop fighting, if you stop expecting those and simply trade with what is in front of you. There can be some good, consistent days that'll have you in the profit zone more often than in the red zone. We also talked about more importantly, about the higher time frame. The 4-hour chart tells us what kind of market we're in, and then the 15-minute chart, typically, or the 5-minute tells us when and where to engage. And at the end of the day, the technical analysis isn't about predicting the future. It's about organizing the information on the screen, building a plan, defining our risk, and then letting the market tell us if we're right or we're wrong in a controlled risk environment. And so, thanks for spending your morning with me. Appreciate you guys being here. Thanks for all the support, any question, and all the questions. If today's lesson helped you at all, look at the market a little bit differently than I did my job. But as always, guys, I will see you later on in the week, and I will be lurking around here this afternoon. Hopefully we get that afternoon pullback. That would be great. But yep, thank you, Delphine. Thanks, Terry. Thanks, Renee. Thanks, everyone. Have a good one, guys. Enjoy your lunch.